So, hello and welcome to this video. Today we'll talk about what drives price action. What moves price action? Why is the reason that we get all these patterns and movements on the charts, okay? And it all comes down to two mechanisms of the market: accumulation and distribution. So understanding market structure is understanding accumulation and distributions. So we always talk about consolidations and corrections, right? That sideways action, sideways movement, that when the price moves in these waves like this, something like this. And this is a consolidation or correction. This is a consolidation or correction. This is a consolidation or correction, etc. But in the case of accumulation and distribution, this here would be an accumulation. This here would be an accumulation, and this here would be a distribution. So a correction or a consolidation is fundamentally either a distribution or an accumulation. So what I want you to understand is that the market, like these corrections and consolidations, they are not random. They are not the market trying to figure out where to go. They are either an accumulation or distribution. So it's either the market trying to pop up the price, make an impulse to the upside, or the market trying to make an impulse to the downside. And why is that? Let's take a look at the definitions of accumulation and distribution. So what is an accumulation? An accumulation is when the price starts to trade sideways and starts building a base. Okay, so the price is setting up the market for a pop. Excuse me, for a pop. And what is a distribution then? A distribution is also the same thing. Market starts to trade sideways, but is topping. Okay, it is setting up the market for a drop. So this happens on all time frames. Okay, it's about perspective and interpretation. So look at this example right here. For example, we have these smaller accumulation and distribution processes, but on a higher time frame. This whole thing could have been an accumulation, okay, that set up the market for this impulse pop. So it is extremely important to understand the context of the market, to have a framework, okay, to understand multiple time frames so that you can base your trades in the correct time frame. Okay, let's continue on. So the next step to understand is that what can you gain from these consolidations and corrections? If there's something to gain, it's that this is either an accumulation or a distribution. So a consolidation or a correction can either be an accumulation or a distribution. And this is where patterns come into the picture. So patterns, they specify what the price action is doing. They specify what the correction is doing, what the consolidation is doing. So it's price action that creates these patterns, and they are the result from the two mechanisms that move the market: accumulation and distribution. So let's talk a little bit about patterns and how they form, why they form, okay? I'm gonna delete this. Delete, boom. So I have talked a lot about three-wave structures and these kind of structures here, and that they come in different forms and shapes. You can have regular flats, you can have expanding flats, etc., etc. Another very, very important aspect of patterns are the wedges, okay? These patterns that contract and they can also expand, but they very often form at the bottom or the top of structures. The same with, most people also know all the classical patterns, the double tops and the double bottoms right here. These patterns are often a product of accumulation and distribution processes, or I'm sorry, I should say that these are the product of accumulation and distribution processes. When the market is pushing up, going higher, 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 then you start seeing these double tops happen at the point where the market is starting to distribute, because the market is setting up for a drop, okay? And these patterns in the middle, when they are moving with the trend, right, following the trend, you often see three wave structures in here. Accumulation, okay, it is like continuation accumulation structures that just continue the prevailing trend. But the thing is, and probably the most important thing to grasp, is how multiple time frames fit together. You must use a higher time frame for perspective to actually understand where the market is moving. So what do I mean by that? Let's just take one last drawing here, one last example here, and then we'll move on to some charts. When market is setting up, something like this, yeah? Then it pushes up. How do you know whether this move up here, this impulse, this wave, this leg, or this trend? So there's a lot of terminology that can be used to describe the same thing. This is why I've been introducing some different terminologies that explain the same thing, so that you guys can understand and get that cleared up. Okay, the same with consolidation, correction. It's basically just either accumulation or distribution, and then impulse is just the same thing as a wave, as a leg, or as a trend. But I will dive much deeper into this in later on different videos. So let's just get back into this here. How do you know whether this move will continue up or actually come down? Okay, we can heighten the probability of our analysis, of our way of judging this, by looking at one adjacent time frame, one adjacent higher time frame. So if I'm looking at the 1 hour here, I would probably look at the 2 hour time frame or the 4 hour. Because you have to look at a higher time frame to understand where you are in the bigger picture. Let's say that you go to the higher time frame and you see that you have a big move down. Okay? So what we gain from this is that the higher time frame is moving down right now. So this accumulation on the shorter time frame, is it strong enough to offset the volume of the higher time frame that is coming down? And if the lower time frame volume down here is strong enough to offset this volume, we will continue up. But at this moment of time, we don't know if it is stronger, and you have to remember that the higher time frame is always more significant than the lower, which is why if I see a big downtrend, I will look for a continuation to the downside, okay? And on the lower time frames, I will look inside this move and assess whether the lower time frames are gaining strength and whether they are actually offsetting all of this bearish volume, and whether this volume is being dried up. And if that is the case, then slowly but surely we will start to see market just move, and then go. So this can be a little bit hard, and it takes time to learn to assess whether the market will continue to go up or actually just fall. It all depends on what's going on in here in this part. And this is where another concept that we will talk about, not in this video, but where it's important to know whether the price action is gaining levels or losing levels. Because the thing is that accumulation, let me just get this here on the screen. Accumulation moves toward lost support and previous highs, and distribution moves toward previous support and previous lows. So what does this mean? In this case here, let's say you see we have this accumulation here, and accumulation can already begin. This here could have been a wedge. Let me show you. So price is coming down and it's starting to slow down and contract. It builds and then suddenly it pops. So we have accumulation here. Then where does this accumulation intend to move to? Well, do this. Accumulation moves toward lost support and previous highs. So this here, this point was support, and we lost it because we broke and went below it. So we accumulated and impulsed, popped up to this level. This is also how you find levels in the market, targets or support resistance areas, or supply and demand zones, etc., etc. So all of this works together to form price movement and price direction. So you have accumulation and distribution, and as accumulation and distribution moves, as the price either impulses up or down from distribution, then they move toward these levels here, and these levels create corrections and consolidations, right? Because a support area is an area that has been tested a few times, and an area that has been tested, let's look at this. You get a move up, you get move like this right here, a double bottom, support, and market bounces and breaks out of this resistance. So these consolidation, correction, pattern areas, channels are what creates our levels, our support resistance areas on all time frames. Okay, that was a lot of information. So let's review some of it and try to simplify it, okay? I'll go to the charts now. So let me delete everything and find, okay, right here. So we're on the Euro USD right now. And there's some very good examples here of accumulation and distribution. So let's go to the 1 hour. Right now, market is coming down from this leg up here, right? We moved up in this trend. So, and just looking at this price action, just when you're looking at it, you can clearly see how the market is moving in these corrections, consolidations. We have an impulse. Look at this. Correction, impulse, correction, impulse, correction, impulse, correction, impulse. It's happening everywhere, on all time frames. Look at this. And these, remember, consolidations, corrections are actually accumulation or distribution. So you have to figure out what this correction is. Is it accumulating or is it distributing? Because if it's accumulating, then you know it will drop. Okay? And then you have the patterns that form in these accumulations and distributions. They are a way to specify what the price is doing. So patterns help you heighten the probability of whether it's an accumulation or distribution, basically. But let's just move down here. I just want to show you an example. Let me just check. I traded this piece here. Actually, let me just replay it. Let's just rewind. Okay. So this is the price action right now. Price is moving up right here. You always have to look to the left when you trade. What has happened? So we made a top here and we have a low here. So we have an impulse here. We have a move up. Basically, we have one leg up. Then market came down. And now it's moving up. So just from looking at this, I would, make an assessment. Okay, there's a high probability that, we can continue up, then come down and give us some kind of three-wave structure and then push up. But whether this happens in exactly this way, I have no idea. Okay, this pattern has many subsets. Remember that it can create a flat like this. It could do this. It could do this. So don't get emotional. Don't get attached to an outcome. That is a rookie mistake, and that's what what are killing everyone's gains. People are getting attached and they are getting so married to one idea and one idea only. Always keep an open mind when you're trading. Okay, and this is where technical analysis, understanding market structure, understanding patterns really help, because they give you an objective way of seeing the market and the price action. Okay, so I'm looking at this now. When market is pushing up here, I see that we made some kind of, and look at this as well. Look at this correction here. Look at how ugly it is, right? But it's still an accumulation and we still got the move up, the pop. So the patterns do not have to be perfect. Like there's no such thing as perfect looking patterns. Like look at this here. But when I see something like this, this is clearly looking like a distribution, because we're not really going anywhere. We popped up, popped up, and then we came up, nope. We came up, nope. And we came up again, nope. Market couldn't go anywhere. This is where a tool as, let me show you, the MACD can really help you, because it shows you the momentum, and it's a trend following indicator basically. Momentum following. You can see here, as the market is pushing up and making these higher highs but not really going anywhere, market is our indicator is going in the opposite direction. So it's showing us divergence. It's basically showing us that the market is distributing up here, that is topping out. It's not going anywhere. So when I see something like this, I'm thinking, okay, this might be the top. And this is why you need lower time frames to go in and look and analyze what's happening in here. And then on higher time frames, like look, on the daily, for example, you can't really see what's happening in the same way. On the 4 hour here, this actually looks like a three-wave structure. And we might pop. But this is why you go down to lower time frames and really figure out what's happening in here. Look at this. This is a mess. And if you use it in confluence with an indicator, for example, MACD, that is representing the data on the charts, it's representing these candles in a different way, then we suddenly start, we're building a trading idea now. We're building confluence, we're building parameters, objective parameters that are showing us, okay, looks like we might start to come down. And this is where then you have to apply a strategy now to trade this. So if your analysis, my analysis right now is saying that this market is coming down, right? And if I'm in this point of time, I wouldn't be able to trade this. Okay, and remember, when we looked at the context of the market, it also showed us the possibility of this going down. Just purely from looking at, we have a leg up here, and we have possible pre-wave correction. So it could come down as well. So how do I trade this sell? Is there a sell setup here? Right now, you can't really sell into this because you would need something like this, for example. Let's say we also have a level here. So you see, we'll take this support. There's also support here. If you break, come down, even you can wait for something like this, try and trade that, or you can be more aggressive depending again on your strategy, on what your entry is. You can wait for it to break a level here and correct, come down, or as I like to use VWAP. VWAP gives me an precise intraday look of where the volume is, where the bear and bull volume is. Okay, so I can see right now that intraday the bears are strong, right? They're winning the battle between the bull and bear battle, however you wanna describe it. So let me go down to the 15-minute, because this is where we will find entries, some very precise entries, or 5-minute even. But here in the 15-minute, take a look. Take a look what's happening as well. Yeah, clearly see that the market has no momentum. The market, there's big divergence. Okay, so this is another confluence, another parameter to your trading idea that is showcasing that, okay, market is weak right now. We might fall. So let me look for sell entries. Okay, there's not really anything right now. Let me just take a look quickly at, there's nothing. I wouldn't be doing anything right here. So let me just start it. Let's see what's happening. Okay, it's coming down, It's not really best time to sell. Okay, now we're getting a pullback. This is good. Okay, now you have to get ready, okay? Because this, like, now I'm talking from experience, but this happens a lot where we came near this area here where we have support, so we reacted, pushed up towards VWAP. But if we come up to VWAP, well, I'm selling, okay? If we break VWAP just like boom, like this, then I'm not doing anything, I'm gonna wait. But if market comes up here and start rejecting, that is a sell, okay? It's also a good idea to have a sell order below here if the market starts rejecting around this area, but you don't get the sell. So, and remember, all of this is based on higher time frame analysis, and that we saw that this possible distribution coupled with possible higher time frame pattern here that could come down, right? And I could even go further and show you why. Okay, let me just do that. Actually, there is a high chance that this market will go up. Well, look at this right here. Accumulation. on the higher time frame, market is accumulating in here. So there's a good chance that all of this is an accumulation to pop up the price. So are you guys, like, I hope you're starting to see the components and how I'm fitting all of this together. Let me get back here. 15 minute. Okay. I also use 5 minutes for entries, but let's just stay on the 15 minute right now and let's see what will the price do. This here gonna be an entry order. Let me see. Okay. Yeah, okay. So this is why you have to learn how to use entry orders as well, because I was looking for it to come up and test VWAP, and then I would sell if we got rejection up here, but obviously that did not happen because price action will not move as you want it to move. Okay, so you need to have specific tactics so that you're able to catch the price or the movement of price. If one of your entry parameters fail, you need to have other ways to enter the market. Okay, so right now, okay, market popped down. Let's see. Of course, your stop should always be at places where market is invalidated. In this case, I would have a stop loss around VWAP, right above VWAP. Like, I would just follow the VWAP. As the VWAP is coming down, my stop would be slightly above it. And of course, position size, position size, position size. So have proper risk when you're entering these trades. Then, next important step is to look left. Okay, let me go to the 1 hour. You have to look to the left, to this leg climbing up here, because we are retracing down this leg coming up. So where are the significant levels? So where are the significant target areas, possible target areas? Well, this is a consolidation, correction, accumulation, and in these points, these are the points where you can find significant levels. Let's just first, we'll take this top right here. I'm just gonna do what I'm doing, something like this. Okay, we just broke past it, so, and quickly even, there's also here, you see this, there's a little accumulation here, there's a little consolidation correction here in this bigger pattern. You see resistance, and we broke it cleanly. Let me maybe, yeah, right there. So this is a significant level as well. So I think that this here is a good place, good area to have a target. And it's completely, again, objective. I just put it in here because there's resistance. We also see support here. So we have a little zone, okay, in here. But yeah, we have a little zone. So let's see if we even will reach this area. Let me check the 15 minute. Yeah, it's good. Okay. Let's see. Okay, we came down. So yeah, that would be a trade. And yeah, I think I'm gonna stop right here, and I'm pretty sure that there will be a lot of questions after this long video. I went through a lot of different things, a lot of different concepts, and I'll make sure to make better, more concise videos and simpler, where I'm gonna build on top. I'm gonna present the concepts, and then I'm gonna build on those concepts, because right now I just wanted to give you a little feel an idea of how I trade using market structure, levels, patterns, accumulation distribution, MACD, and you just saw right now how I put it all together, so only trade when market is setting up to do something that makes sense. Yes, so I'm gonna stop right here, and I hope you enjoyed the video, and I hope that you can get something out of it, some inspiration, and use it either for further study or for your trading. So thank you very much. So I hope that this video will bring you some value and that what I'm saying makes sense to you. Thanks for watching, guys, and see you next time.